Welcome back. You're tuned into Bazaar Morning Call. Well, we've run you through the stocks with the fundamentals and the reasons why we're tracking the stocks. But let's get a little bit deeper into it. Siddhartha Khemka, the head retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Well, it's a Friday morning, but we've got plenty of stocks that will be reacting to news flow. And I want to start off with Coforge. They've gone ahead and they've done their acquisition of Cignity. It helps them scale up the revenues, but maybe it's not the ideal fit. And besides that, the revenue growth as well as the margins were disappointing and no guidance given in terms of revenues. So I think the stock could pull back. What's the view on both these two names?
Yeah, very good morning, Nigel. Good to be on the show Friday morning. I think if you look at the acquisition, definitely it's an aspirational acquisition to help Coforge grow into a 2 billion firm by FY27. And also they would be looking at improving the operating margins, which the company has claimed that over the next 2-3 years, they could look at 150 to 250 basis points of improvement in the margins. So they also announced the results. And as we know, we've seen a lot of IT results. They have not been that strong. And overall, we have not been that positive on Coforge, given that FY24 overall growth has been pretty dismal, as well as valuations continue to remain high for a name in the mid-cap space. So overall, I think acquisition will definitely help them over a longer period of time to kind of get that growth as well as the margin uptick that they are looking for. But in the interim, I think definitely it's not the best of the synergies that the market would be looking at. So there could be definitely a pullback, especially given that the acquisition in this current time. So I think also don't have a view on Cignity, but with Coforge, I would stay a bit cautious and neutral right now.
Okay. What about Bajaj Finance? RBI has lifted that restriction on Bajaj Finance's two products, right? The e-commerce and the Insta EMI card. So that overhang is out of the way. But as a long-term investor, do you like the stock?
Yeah, good morning, Sonia. So post the Q4 numbers, we downgraded Bajaj Finance from a buy to a neutral. We are looking at a weak year ahead. And definitely this development within 5 months, they have been able to resolve the RBI issues and get past that. That's definitely a big positive. That will definitely bump up the growth estimates in the near term. But having said that, some of the other factors, for example, if you look at, we believe that the near-term growth, especially on the AUM, could be down because of the change in product mix. The company is cutting down the business in the rural B2C segment and also witnessing slower growth in the B2B business segments, which was kind of also impacted because of the e-com and the Insta EMI card ban. But also, another factor is that NIMS is expected to compress about 35 basis points in FY25 compared to our earlier expectation of a 20 basis points rise in cost of borrowings because the company is facing difficulty in passing the interest rate hikes to its customers. Plus, we believe that at 4 times FY26 price to book, if you look at PE, almost 20 times PE, and the room for a good upside with the kind of growth that the company is now reporting looks limited. So while today this stock will definitely react positively, on a long term, we have a neutral rating and a target of 7,800.
Sid, morning, Prashant here. Just a quick word on these sort of wild moves in REC and PFC, names like those. I mean, after earnings, has Motilal kind of changed earnings estimates, etc.? Numbers have been pretty strong. REC is up, by the way, 20% in 2 sessions, 10 on Tuesday, 10 yesterday as well. So just wanted your thoughts here.
Yeah, morning, Prashant. So I think first is we don't have coverage on REC PFC, unfortunately. But if you look at the overall power sector, the demand has been pretty high. The latest April month demand has also come in for power, which continues to remain strong. We also saw Coal India announcing its numbers yesterday. Good set of numbers. Production volumes have gone up. So overall, we are positive on the power space. We believe both power financing space will continue to do well. We like some of the power stocks, for example, Tata Power, JSW, NTPC is our preferred pick within that space. And another way to play that is Coal India, which is the company provide the coal for the power generation. Good set of numbers, good growth, high dividend yield. So NTPC and Coal India would be our preferred picks within the overall power sector space.
Sid, I'm sure you said REC, PFC. Of course, you don't have formal coverage. Chola Finance, you have coverage, Sid?
Yeah. Yes, Prashant.
So Sonia asked you about Bajaj Finance earlier. In that same context, Chola, and this is an interesting note from Macquarie I was pointing out yesterday, they were saying that the valuation gap between Chola and Bajaj Finance now is, there's still some gap, but very little now. The gap is the lowest ever. And then just what's your sense on this one, Chola Finance?
Yeah, Prashant. So I think, yes, the valuation gap has kind of narrowed down. You have seen Bajaj Finance kind of consolidating below that 8,000 odd levels for last 2 years, while Chola has consistently done well and delivered. So based on our numbers, Chola is currently trading at 3.5 times price to book on FY26 compared to 4 times for Bajaj Finance. Chola reported a very strong numbers even in terms of the last Q4 numbers. PAT grew 24%, which was 9% higher than our expectations. NI was in line, and overall for the full year, PAT has grown 28%. So I think we are expecting a steady growth from Chola in terms of a disbursement growth of 21%, AUM growth of 27%, and a PAT growth of 34% over the next 2 years. So with that kind of growth, I think valuations are definitely justified. We have a very positive view. We have a buy rating, and we have revised our target price upwards now to 1,500 rupees. And we are now valuing Chola in line with Bajaj Finance at 4 times FY26 book value. So that's the kind of confidence that we have now in Chola, valuing it in line with Bajaj Finance. The company continues to do well, as I said, across the key segments that they are present in, and the overall growth is pretty strong.
Okay, overall growth is pretty strong. Got that. Well, Siddhartha, M&M has been the big gainer this week. I mean, the stock has hit a fresh record high and is now up almost 25% this year. It had a new facelift as well, the new launch, the XUV 3XO. What are your thoughts on M&M as a stock? How are you positioned and what's the long-term view?
Yeah, Sonia. So if you look at M&M, I think on the passenger vehicle side, they have been consistently doing well. And the new launches are only filling up those gaps. So the revised version of the 3XO, there is a good enthusiasm in the market. The earlier versions of your XUV 700, those products are just... so the market share in the SUVs is very strong, and the newer and refreshed versions have been taken up well by the market. The only concern that I see is that the tractor volumes and the guidance that the company has given for the industry for the full year is a mid-single digit volume growth for the tractor industry, which is kind of a dampener at the start of the year. But with now Met as well as the SkyMet have been said that this year monsoon could be above normal. That raises hopes of a rural recovery and also for demand for some of the agri-related equipments, farm equipments, including tractors. So I think overall, on the long term, we are very positive on M&M in the auto space, driven by the strong growth in the SUVs, and B, recovery in the tractor segment.
Okay, all right. Siddharth, what about the cement pack? The numbers have been very, very diverse. One trend that is clear is realizations are under immense pressure. It's a stage where in Q4, if I see on a sequential basis, realizations are down by 4%. I'll say it's down by only 4%. That's the kind of pricing environment that's there. And we have seen that some companies even 8% pricing decline on a sequential basis. The problem is pricing. How do you approach this space? On one end, a large cap like Ultratech is doing well. The smaller cap guys will have a big problem.
Yeah, Nigel, I think very nicely put. If you look at divergent numbers, mostly companies have been facing the challenge on the realization front. While volume growth has been pretty strong, they have been unable to pass on the price hikes, and that is impacting the overall realizations. And in stark contrast to that, if you see Ultratech, they have managed to overcome this challenge by looking at cost controls, which has helped them maintain the EBITDA per ton. And that is where I think most of the companies within the cement space will have to look for in the near term, given that we are already into the election season. So a lot of these large projects, government projects would be on a slower growth. We will be then heading into the monsoon again, where it's a season where generally we don't see price hikes taken by the cement companies. So I think in the next 1-2 quarters, pricing is something that will remain on a weaker side or a softer side. And within that, you will have to look for players which are managing through costs and other measures. So Ultratech clearly is the winner there in the cement space. We kind of like that stock, which is our preferred pick. And if you look at some of the central players like JK Cement, which has also done well, while the eastern and the southern players have been struggling more with the price realizations, the western and the central based cement companies have tend to done well.
Do you have, Sid, coverage on something like K Fintech? Reported numbers a few days back. I mean, its stock's been on a tear since then. I think from 650, it's past 800 now. We had the management with us, and they said that they don't just want to be RTA, but they want to do more things. They want to add, provide a lot more value-added services for the financial services industry. But if you have coverage, your thoughts?
Prashant, unfortunately, K Fintech we don't cover, but I think the overall capital market themes have been doing well. The likes of CDSL, K Fintech, CAMS. I think this entire space, which are supporting to the core capital market themes. With the growth that continues in the capital market, we've seen some of the brokers, the numbers that they have reported at record highs. So that should help the capital market supporting stocks as well.
Okay, all right, Sid. Have a good Friday and then have a good weekend as well ahead. Thanks a lot for joining in and filling us in with a quick analysis on all those stocks.